Hello guys, fairbinaryoptions.com here, Monday morning 28th of October 2013, and we are looking at the Euro and Japanese yen chart. You would probably ask yourself why looking at the daily chart when we trade binary options, because I want to go for expiration date being end of month this Thursday or even end of week this coming Friday. So basically what I'm trying to do here is to buy puts. I want for this pair, I have a bearish, let's say, count, or the bearish statement, the bearish analysis for the euro and the Japanese yen. And whenever you are expecting price to go to the downside based on your analysis and you trade binary options, then you need to go and buy puts. This is what we're going to do here. The reason for that is this rising wedge, or terminal impulse if you want. This is the rising wedge, and maybe price will go and make a new high when compared with the previous one, taking into consideration the fact that we are actually looking at a potentially extremely volatile week, in the sense that we will have the FOMC, we will have the Royal Bank of New Zealand, and we'll have also the ADP, the jobs data out of the United States. And whenever you have job data out of the United States, the Japanese yen pairs travel the most. And expecting this Euro-Japanese yen to be no different this week. Now, because of that, I'm looking for buying puts because of this A, B, C, D, E, or 1, 2, 3, 4, 5. The third wave here, as you can see, pierces the 1, 2, 3 trend line. The fifth wave, sorry, pierces the 1, 2, 3 trend line. And normally our target to the downside should be now something like this. So because of that, I would like to buy puts. So let's just write here buying puts with end of day, not end of day, sorry, end of month expiration date, and also I would like to buy puts, or depending on the type of a trader you are, an aggressive one or maybe more conservative, go and buy puts with end of month expiration date. That would be Thursday, or buy puts with end of week expiration date, providing your broker allows you to do that. I'm trading with lionknife.com. I have this option, and again, just to make it visual, by the time you are buying puts, basically you look for price to go to the downside. Normally, whenever you are having a rising wedge like the case is here, it is also being called a terminal impulsive move. In a terminal impulsive move, all the moves or all the waves to the upside are, or have the tendency to be zigzags, to be formed out of a zigzag. So this to be A, B, C, and then a correction here for a flat, and then another A, B, C, and then another correction here, and so on and so forth. This seems to be a zigzag here, A, B, C, to be a zigzag for this wave. And normally this should imply the end of the rising wedge. It might be that the last leg here to still make a new high, but on the long run, and given the fact that end of month is coming, we are looking at this to be successfully in the money. Again, in order for a put option to expire in the money, you need price to go to the downside, and at the expiration date to be bigger than the striking price. Now, what is the striking price? The striking price is the price you buy the option for. So if we are buying puts here, right now, 134.75, then we are looking, this would be our striking price, and we are looking at the expiration date, the striking price to be lower than the actual price, sorry, at the expiration date to be lower than the striking price. And there you go, our option to expire in the money. This is what I wanted to show you for today. This is basically euro and Japanese yen, and keep in mind This is fair binary options. We are trading here with lionknife.com.